Hey guys, welcome back. DripCoach here with Drip and Farm Poor Poverty, where we don't trust, we verify and operate with integrity and transparency. Today, we're diving into a video from Bloomberg and why this is still a great opportunity for Bitcoin and how you're still early, because big companies like this still got it completely wrong. So stay tuned. All right, in this video, it was a clip. I didn't catch the whole thing on their channel, but they do this open interest video segment, and they had Michael Saylor on in the last half, and that's what I caught specifically. And I was just shocked at the question these people were asking as it relates to Bitcoin, even now in 2024, that they just still have no clue about Bitcoin. And if you're not familiar, Bitcoin is a company that provides financial software tools and such as analytics, liquidity trading platform, data services, news to financial companies and organizations. It's been around since the early 80s, so like 40 freaking years. Michael Bloomberg is like in the top 13 richest people in the world. The company itself is worth $10 billion. And Bloomberg on their What We Do About Us page says they deliver accurate, real-time business market moving information that helps them make critical financial decisions. So this piece here would imply that they would be familiar with something such as Bitcoin. And I'm going to play four different clips from the people on the panel that were asking questions. Now, I don't know how that relates directly to the Bloomberg company as a whole, but clearly these are mouthpieces for the company, and they're talking to Michael Saylor. And I was actually surprised Saylor didn't eat them alive with his responses. He kind of missed the opportunity, but we're gonna start first right there in the opening, where one of the reporters or panel of discussionists are asking about Bitcoin as a hedge against the swing of traditional assets.
We're turning now to the crypto world because there's a notion there that Bitcoin is a hedge against the swings in traditional assets, but that seems to be breaking down. Bringing up a chart here just to show you the volatility over the last couple of months here. Gold has held stable, but Bitcoin has swung quite wildly around it, though the returns are similar in the past month. We're going to talk more about this, the rationale, all of it, with Michael Saylor, co-founder and executive chairman of MicroStrategy, the largest public corporate holder of Bitcoin. And Michael.
So I want to stop there because she literally said that she's evaluating this over the last couple of months against basically gold. But the premise was that, is Bitcoin a hedge against traditional assets? And if you're familiar with assets, those are things that you're not supposed to be trading, so to speak. Like an asset would be like a house. It would be long-term investments, things of that nature, right? So just the simple fact that she's talking about this from a short month time horizon already kind of loads the question to say that she doesn't quite have a clue about the purpose of Bitcoin.
First, I want to ask you, in the last couple of days, you did see for a moment there Bitcoin fall below that $50,000 level. I do understand that MicroStrategy acquired an additional 169 Bitcoin for just over $11 million in July. But when you see that dip below 50,000, do you dive right in, and to what degree?
So she asked him about, I'm going to skip that part from Michael about what they would purchase because he doesn't actually go into detail on that. But I want to touch back on, again, Bitcoin and assets, right? So let's look at that. So if you look at Bitcoin compared to traditional assets, that's exactly what this chart does. Bitcoin and traditional assets ROI versus the US dollar. You have Bitcoin, you have gold, and you have the S&P 500. And literally there is just no touching Bitcoin at all compared to other traditional assets. And if you're a fan of Warren Buffett, he would tell you to get the S&P 500 and sit that out for 10 to 15 years, and you would make some substantial returns for sure. So that is probably the best way to hedge against inflation, because you're betting on the top 500 companies in the US. And a lot of those are going to be tech and things of that nature. So that performed really, really well. But again, it didn't hold a candle to Bitcoin. In the third year was like its absolute low, 35%. But everything else is triple digit and much, much higher. Just an insane amount. Then we look at compound annual growth rate over here with Bitcoin and gold and the S&P 500. And you see that annual, it's like 70%. I don't know what the average is. I've heard different amounts. If you were to average this out, I've heard people saying it's over 100% and things of that nature, but I'm not sure. I didn't actually do the numbers on this, but you can clearly see it just completely dwarfs S&P 500 and gold. And when we look here at Bitcoin, other major asset classes, you have the aggregated bond index, the Dow Jones, emerging markets, high yield corporate bonds, SPX. And basically every year Bitcoin was on top except for a few. Here, the AGG was the best with 0 because everything else was down in 2018. And then SPX was 12% and Bitcoin was at a negative 58. So there are some months or years, I should say, where Bitcoin underperformed. But again, remember, this is an asset, right? So you're not supposed to be trading it on a month-to-month basis. You're just supposed to add to it. And then, as you'll find at the very end of this video, like Michael Saylor says, if you want to have something to spend, then you borrow against it. So as he likes to say, this is digital Manhattan real estate, and you don't go sell off your Manhattan real estate to buy a cup of coffee. So clearly, just from that initial question, they are completely clueless as to the purpose of Bitcoin. But we'll press on to the next fumble from these financial advisors, or whatever you like to call them.
And the politics of the asset.
Isn't it a problem when a store of value, if someone wants to use Bitcoin as a store of value, can lose 10 or 20% over a couple of trading sessions?
And once again, store of value, a couple of trading sessions. Like, that's literally an oxymoron. Store of value is meant to be something that you actually store value in for the long term, an asset that maintains its value over time without depreciating. That's the complete opposite of what the dollar does, or any currency for that matter. So he asked, isn't it a problem when a store of value can lose 10 to 20% over a couple trading sessions? Well, a couple of trading sessions to me would be like a few minutes. And even if you were trading once a month, that's a couple months. So that is not a store of value, like, by definition. It doesn't make any sense. How could you even ask that question? But oddly enough, they did. But when you look at BTC as a store of value, here is a chart showing from 10 years now. October 1st is the monthly chart on Bitcoin. And then all the way to where we are now, 19 million or 19,146.57% up from $321 to $61,000. Let's look at the US dollar as a store of value over the last 100 years. So that $1 100 years ago would have bought 30 Hershey bars, and now it buys 1 cup of coffee. So this is the opposite of the Bitcoin chart. So again, the question doesn't make any sense if you actually understood Bitcoin, and literally, in him phrasing it that way, having a store of value lose 10 to 20% over a couple trading sessions is just, again, another oxymoron. It's just fascinating that these are the people that are pretty much navigating the actions of the masses, because you look to people like Bloomberg or whoever else for their advice. And if they don't even have an understanding of how the actual asset works, then you're going to be making uninformed decisions as well. And you can see just in this short clip that they are clueless. Now, I don't know whoever wrote the questions for them. Maybe these people actually have more insight and somebody else wrote the questions. I have no idea, but that's 2. Let's go on to number 3.
And there really is no second best.
But it sounds like that much power generation is going to lead to, a higher global temperature, melting ice caps and rising seas. Like, when can it get carbon neutral?
So this one was a question about him saying he talked to someone else and how Ethereum would be better, and that because of the proof of work, it's going to cause basically, you know, the oceans to boil and polar ice caps to melt and all this stuff like that. And finally, we get some response from Michael that is quite fitting, where he says this is pretty much just guerrilla marketing and but debunked at the
silly
stage.
observation. People have been saying that for 5 years. Bitcoin's not boiling the ocean. It's like 10, 15 basis points of the world's energy usage. So it's de minimis compared to everything else. 30%.
And we can look at that as well, because there's a chart here showing Bitcoin energy usage from based on country consumption. And then my favorite is actually this down here, since Bitcoin is meant to be a store of value related to, you know, replacing the existing infrastructure that we have in place. This is estimated annual energy production or consumption for the current banking system. So the entire Bitcoin ecosystem is said to use less than half of the energy banking system required. That is fascinating. Remember, each of these banks, data centers, networks, all that stuff, they can be hacked. Your information can be stolen. And it's also in a fiat currency that is just being inflated. Bitcoin is globally decentralized and, like you said, nation state resistant, using more energy than the US Navy. So it's nuclear resistant as well. And it's still using less energy consumption than our current financial transaction network that we have. And it can replace that. On top of that, you have the Lightning Network being built on top, as well as other ecosystems being built on top of Bitcoin. So it is clearly, as he mentioned, like the apex predator asset. And then everything else can be built on top of that. So again, they're just throwing up these questions or statements, I should say, but there's no basis for any of them. It's like after 15 years, they still haven't done any homework. And let's go to the absolute last one. This is quite funny as well.
It's the future.
You know, back in 2013, Michael, when Bitcoin was marching up towards 1,000, we started reporting on it for the first time. And I actually spent 2 weeks living only on Bitcoin, using it to buy gas and, you know, beers at a bar down here and groceries at a place in Greenpoint. I bought my first one for $800, my second one for $600. And now I wish I hadn't spent them. Is there going to be a time when we actually use Bitcoin as a transactional, currency without like...
Fascinating, right? He actually said, when are we going to use Bitcoin as a transactional currency? When earlier, they were talking about how it's supposed to be a hedge against traditional assets. So which one is it? Is it an asset or is it a currency? And that's always been the issue with some people talking about Bitcoin, is like, when can I use it to buy a cup of coffee? And Michael has a great response on this.
Regretting it so much later on?
You know, I think if your grandfather owned a building in the middle of Manhattan and they sold it to buy a cup of coffee or some ice cream, you would have regretted that too. Yeah. Half of the wealth in the world is just long-term capital. Call it $400 or $500 trillion. People just want to keep their wealth. They want to hold their money for decades or generations. Bitcoin is capital. And if you think of it as capital, the most desirable capital in cyberspace, then the right way to consider it is the same way as if your family owned a sports team or a trophy asset or a Da Vinci painting or a building or all the land in Palm Beach. You would hold it as long as you possibly could. You would finance it, and you want to buy a cup of coffee with it, borrow some money from a bank, spend dollars, spend pesos, spend euros, but keep the most desirable property in the universe.
All right.
Well said. Mic drop. So, yes, I know that there is a desire for people to, basically spend the Bitcoin, like kind of swing trading it. Basically, it's like, okay, I made 20 bucks in it. Now I want to go buy something with it. It's like, that is, I guess, some kind of allure for people that are not familiar with it, but that's not what it was designed for. It can at some stage, once it becomes less volatile, and you're using things such as a Lightning Network. But right now, that would make no sense when it can just swing 20 to 50% in the time that you ordered a lunch. So that doesn't make any sense. And like you said, think of it like a Da Vinci painting, or if you owned a sports team, you don't sell that team to buy a cup of coffee. You instead finance it or take a loan out against it. So that's just fascinating that this entire segment, they're kind of talking down on Bitcoin, and it seems as though they're not open to the idea of it. And then that's why I said that we still have an amazing opportunity, because these are the mouthpieces for the masses. I don't know what other news networks and stuff like that, investment firms, companies, what kind of information they're giving out, but this is fascinating to say the least, that here we are 2024, just after the halving, and seeing ETFs and stuff like that and big financial money coming in. And then you still have all of the mouthpieces for these industries talking to the normies, telling them or persuading them or alluding to them that it's a bad idea. Fascinating. So what does that mean for you guys? Well, continue stacking sats. That's it. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? SPRITZ Finance is a decentralized solution to be your own bank and connect your crypto earnings to real-world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now